let's shift focus and get you a better technical sense on what the market is up to and more importantly, what to expect on a day of trade like this, wherein the Nifty expiry is at play. We've got Mr. Vinay Rajani, the Senior Technical and Derivative Analyst at HDFC Securities joining us on the show. Vinay, hi, good afternoon and good to be speaking with you. Give us a sense of how you're reading the market right now. 23,302 is a level that we're not being able to hold on to. What is the next immediate support and resistance levels that you're watching out for?
Yeah, good afternoon and thanks for having me on the show. So fifth consecutive session of a decline and Nifty is gradually breaking all the support. The previous swing low was at 23262. That is broken in intraday and today's low is 23229. So definitely bias is on the weak bearish side. And mid cap and small cap and broader markets which were performing very well pre in the last week have started falling and they are also witnessing some profit booking. So as of now, things are not going fine as far as the benchmark index is concerned. Nifty is still trading below its 10, 20, 50, 100 and 200 days moving average. That means across all the time frames, Nifty is we can say that it is into a clear-cut bearish trend. And unless we see any level about 23,800, the trend would remain on the bearish side only. The only hope for traders is the gap support which was there. So to be precise, on 8th April, Nifty opened with a big gap of 700 points. And that gap range is at 23,155 to 23,700. So basically 23,150 is the lower end of this particular gap, which can act as a support. So this is a lower band of the gap and this is a hope that it should find support. Metal and IT as a sector are outperforming right now and trying to give the support to the benchmark. And but somehow we have to wait for the clarity to emerge. So for Nifty, our view is bearish as of now, and unless we see a 23,800 is getting taken out, we should remain cautious in the market. Yes, stock specific, sector specific, some trading opportunities on the long sides are also that can be monetized with keeping a stop loss. So 23,150 is the next support and 23,800 is the level trigger level for bulls to come back into the markets.
Okay, 23,800. We're going to be watching out for that on the upside. But when I talk to us about which stocks do you believe would make for good bets in the market right now?
Yeah, so right now, as I said, we are bullish on the IT. No doubt, we have seen meaningful bounce and already 4-5% of index has moved in last two sessions. But still, I see this strength continuing, and some stocks are really were oversold and started participating right now. So now LTIMindtree, this is looking very strong on the charts. After a long time, this stock has bounced back and bounced back from the long-term support also. That is also a good sign. Sector is doing good. So considering the overall this rationals, I am considering LTM for the long trade. So in June future, one can go long in LTIMindtree around 4,300. Stop loss can be kept at 4,180. For the traders, the target should remain at 4,500. On the sell side, I'm recommending one PSU bank, which is continually showing weakness. So Bank of India is looking weak on the chart. So Bank of India June future can be shorted around 136.50. 139 should be the trading stop loss. On the downside, we are expecting a target of 131.
Okay. On that note, Vinay, thanks so much for joining us and giving us your sense on the market and, of course, more importantly, the stocks that you're liking at this hour. Thanks so much. Viewers, on that note, it's time to slip into a very short break on this edition of Markets at Noon. Be right back with more on the other side.